that, Ash? You left me in the back for 10 minutes.
Sorry about that. It's a new Restream this week. Well, everybody, welcome to episode 152 of the Lumber Word. I think we got all our technical stuff together. We do not have a guest this week. We're trying to get him for next week. I'll follow up on that one.
And I kind of promoted a really special guest this week too. And my bad.
It's all right. That's all right. We'll work on it. Kind of wanted to talk about stuff. I'll have some notes written down here. Since this is Wednesday, important day today. It's Wednesday the 14th, one day before November expiration of lumber futures, which everybody loves to talk about. A few people use them. Always fun to chat about. And I guess we would have, does Southern Yellow Pine expire at the same time? The November contract. We'll have to check that. That's pretty much set in the books with the print the other day. And kind of, I put some little notes here. I want to talk about the cash market. So what I'm seeing is, I think a lot of people just took business at the end of last year. And when I say a lot of people, toward the end of the supply chain, I think builders went out, multifamily went out. Multifamily's job is to be short all the time. And I don't think, just my opinion, I don't think people respected the market potential for the first part of the year. And I'm seeing that through a couple things. People, I had to say no to an order today because the guy wanted it delivered tomorrow. It's like, I can't deliver something 800 miles tomorrow or 700 miles. I'm like, no. I hate saying no to people, but I've had to do that a lot of times. And also having people ask me, is this thing real? Or how long is this going to last? I'm like, how long is what going to last? They're like, well, higher prices. Like, I guess that's a real question. So I'm seeing things that make me go, items that were really cheap a week ago, 2 weeks ago. Perfect example. Greg and I were talking last night, 2x4, 116 and 5/8. Mills were giving those away 4 weeks ago. 2x6 14s. I couldn't sell them at $450 Chicago a month ago, and a wholesaler bought 2 trucks from me at $510 Chicago today. So, like, Matt, I'm beginning to kind of, you've been pushing it for a long time. Like, man, I think this thing, I gotta respect it at least. It seems that it continues to just march, and the reason I like it is it's not going crazy, right? It's not like silver. It's just plodding along. So kind of want to throw that out there and see what's everybody else seeing on their little pig farms.
Your buddy, our buddy Sig, who's been on the show a few times, called me the other day, and he's quite the futures technician. He's like Greg. He's got kind of a mind for math, and he did that for a living before he got into lumber. He was a futures derivative type guy in New York, and so he's good at charts and graphs, and he was pretty bullish, and I not as bullish as what I've expressed so far in the last month or so. We're at 600 now in March, and I pegged the 800 as the high was my number, so we got a ways to go. But my experience tells me that these types of markets where we just came out of 9 months of downdraft, they tend to last to the upside longer than people expect, and because you go into them and a lot of people are not prepared for higher prices. They just mentally aren't prepared. They don't believe the first third of it, and then they might start buying some stuff in the middle third of it. And then they for sure get long and wrong at the end of it. And then, they just go longer. And so I'm trying to do the opposite. I've been buying a lot in the last 2 months, and I'm trying to slow down my sales a little bit just to protect what I have already invested in and just be a little bit more cagey. It's a lot harder for me to buy lumber right now than it was even 2 weeks ago or a week ago. So, and I have to pay more. So, if I have to pay more and my availability is limited, then, I'm going to reflect that in my sales strategy also. And
And
I
Matt,
think that's just the smart thing to do.
Great point. Talking last night, we've had to slow sales down because we got to ship so much shit and get it out right now, right? And I mean, what's the point of piling more trucks?
Yeah, I mean, we're
Right.
quoting the week of Feb 2 on lumber that we have prompt on the ground, just based on the number of
really,
orders,
what's the difference between $10, right, on a per stick basis? Ash, you're good at doing that kind of math. So whether you raise your price $10 on a truck of 2x4 14s, how much more is a guy paying per piece? Like 3 cents? Who cares?
Yeah, very, very little. Very little.
So the thing that I'm trying, the thing that I'm trying to wrap my head around is, we know that spruce mills at today's prices, you look at today's price, it's probably, maybe it's back to the fourth quarter average price they got after the price increase it's had. And that's probably represents, somewhere between $100 and $200 a thousand loss. So, I mean, this week's markets in spruce has been driven by, announcement of a big mill in Alberta having a fire, going to be down for 4 weeks. And then that was followed up by another mill cutting production by 150 million feet in the first quarter, 600 million feet over the course of the year on top of what's already been cut. Does spruce have another $20 to $50 up based on the current prices, or does it have $100 to $150 up? That's what I'm trying to wrap my head around. And I think it comes down to, Charles telling us about the pine market, because for the last, 18 months, when the pine market rolls over, that eventually pulls all the rest of the markets down with it. So that's I've just teed it up for you, Charles.
Well, Greg, hold on. First of all, I want to say just great job using a power statement. Your first out of the gate was "we know" instead of a lot of people say "I think." And when you say "I think" instead of "we know," it puts you in a weaker position as a speaker. So
We're part-time psychologists for anybody that was right now.
That was a
Ashley,
really
that's because our listeners deserve better of us. That's the reason why. They deserve better.
No, that was great. Like we're gonna kick it to Charles here in a second, but like I'm starting to lean to the side that this thing could move $100, $200. I mean,
how many people out there think there's $100 upside from today's price? Zero. Oh, other than that's right, you guys. Oh, that's right. You guys do.
It pays to be contrarian. I mean,
how many people are positioned for $100 up move?
Well,
Zero. And
I'm concerned that
you know why?
I see.
Go ahead, Charles. Sorry, buddy.
No, the market is definitely keying itself up to surprise a lot of people. And to Matt's point, long and wrong towards the end of it is all the guys that held out too long and they didn't kind of pepper 4 or 5 here, 3 to 2, 2 to 3 here, a block of 5 there, and kind of keep that rolling average because they want to capture as much profitability as they possibly can instead of sustaining some sort of potential slower increase, right? Then okay, I really need it, so I have to pay whatever it is, and then all of a sudden the market changes in a week and a half. As far as pine leading, I mean that still stands true 100%. There's some things that happened over the past couple of weeks that have not sustained themselves as far as some downward pressure buttons and levers that we've seen have kind of gone away, and it's less wood with actually more people needing it faster. So it's almost like
can you explain that to us? Like explain that to people that are going to be a couple deviations down, asking somebody for Southern Yellow Pine prices that we're getting it 2 weeks.
I'm a Labrador Retriever.
So are getting it for 2 weeks or sooner for the last 3 years.
Which part?
Well, no, like you said, there's a lot of levers have been pulled to keep.
Yeah, there's a lot of things that have been done because mills have lost their ass for the past 2 years, right? and they're getting a little bit better in the South at actually trading lumber. So they're realizing that they've got to get things out of the way before they can sustain any sort of price continuity, right? Because for a multitude of reasons, but obviously, you know, you've got truck markets, which is immediate delivery, right? But you also have everybody in the South was aware that there were mills that were not running in the middle of December, and that's why prices spiked the way they did. And they enjoyed that price run, right? So now they're reacting a little bit more proactively than they have historically. So those levers that would you could sit and wait and basically set a clock to something is now a little bit disturbed. That process has changed. It's morphed into something that's a little bit more efficient and effective for the actual primary producer.
Yeah. Last week you said that it was down 30 from, is that still true?
I mean, down 30 from, I mean, premiums are gone, right? I mean, as far as premiums over print, that has kind of subsided on certain items. But there is still items that are strong and just don't exist, right? I mean, you think 14-foot anything, right? Whether it's 4 or 6 inch, let's just call it narrows. I mean, that's a trim back from a 16-foot. They'd much rather produce a 16-foot stick than a 14-foot stick. So 14s are naturally going to be tight this time of year, especially with treaters kind of pending. And I've heard that, you know, some treaters are getting lists out sooner than they have historically because they want to do what I described, right? They want to say, okay, I know I'm just going to use arbitrary numbers here. I know my demand is going to be 100 truckloads of X product, right? Come into February, middle of March. Maybe I buy 25 or 30 of them now and then see where we're at in a couple of weeks and then reevaluate, instead of, okay, let me sit here and just anticipate a break. And then what if I'm late and then I'm long and wrong, as Matt described? And, you know, all the takeaway on that stuff is all contractually driven anyway, based off of print. So it could be a bad deal if it's not played appropriately.
I understand Matt's question here on Southern Yellow Pine. Since you guys speak a completely different language on the pine trading world, the premiums are out, but the print price can still move up to where that premium price was the week before. But
correct,
if something was trading at 600 last week, but it was really 650 in the cash market, it can move up to 650, but it's not trading at 700.
correct.
So the momentum is still leaning to the upside right now.
Yes.
Would you say that yellow pine mills are trying to keep a longer order file and nudge prices up right now?
Some of them are looking at it depending on I think some of them are looking at it based on, like I said, not to sound like broken record, what the appreciation they saw over 2.5 weeks, right? I mean, you look at 12.1 to 12.20 or 12.17, right? And there was $70-$80 in there, right? And print didn't show it, but people were still paying it. So you've got people that stepped in and had to buy it because they didn't have a choice because they needed it. And the question remains, right? It's kind of a conundrum, right? Because it is indicative of what pine does. And I was talking to a colleague of mine that I respect very highly yesterday, and we were talking about the relationship of spruce and pine, right? And why 6-inch historically in pine leads the market up or down, right? And we keyed on the fact that 6-inch pine and spruce are probably, and North American species as a whole, right? Doug fir, hemp fir, whatever, right? Those species are so interchangeable, and when there's a price break in one that has been historically accepted, the outlier gets dismissed very rapidly, right? So if you had, I'll just use an example. If you had 2x6.9s and spruce that were delivered into Atlanta at 580 and pine was still at 500, and let's say there was an equilibrium there and they met at 5.5, people are going to choose spruce over pine, and then 6-inch pine is going to decrease in demand, obviously, right? So that's one of the big key factors that we've been paying attention to, and a trend that we've been tracking for the past 2 years.
I just want to highlight, and congratulate all of our viewers that in September-ish time period, maybe it was August, September. Yellow Pine 2x6 was trading sub $300 FOB mill, and I think we unilaterally said, back up the truck, load the boat. And, kudos to that. That's like, I think the market's up $150 from there ish,
At least,
maybe, Charles.
At least
50% increase in 4 months.
So if you bought
4 months, like 70 days.
Yeah. I think you could still do it in early October. You're right.
Hey, what happened to the spread on the futures on the lumber on the Jan yellow pine spruce? Where are we at there?
Spread today is
it printed
like
445 or 450,
it's like
65.
It's $95 right now. From
on the futures.
Well,
LBR versus SYP. That's correct. And then to Ash's point, the board is actually almost a $10 premium or $11 premium over what was. You said 445, right, Ash?
465. 465.
455 Jan pine and 550 spruce. It's $100 spread.
Yeah, I'm just saying what print is. The print came out at 465, in which tracks the Random Lengths Fast Market tracks that print.
Hey Ash, what is the Southern Yellow Pine contract underwritten by?
What do you mean?
I asked you this question because I was educated the other day, and I feel like we need to clarify.
This is a public service.
So I didn't know if you wanted me to bring that up or not.
I relish in the fact that I'm wrong, because if I'm wrong and I'm in the right room, somebody will give me the information I need.
Well, no. So
Charles, I love is how much money you've made being wrong. That's what I love. And you know what? I mean, I'd always rather make money for the wrong reason than lose money for the right reason.
I'll tell you the reason.
That's called
better
luck.
lucky than good, Greg.
Charles and I were talking. Here's what I think, and I think some of the publications have to look at this. But Charles, you brought up a good point. So while we were mutually sharing information on Saturday, which by the way, my wife looked over at me like, "Why are you talking lumber on Saturday?" The 2x4 Eastern contract is a Random Lengths contract, and Charles, throughout the thing, he thought it was a 16-foot contract. Is that what you were saying, Charles? And
from the way I understood it in conversations that I had, and granted, this is me not doing my due diligence, right? That I should have, because the specifications are actually on the CME website. But I was, to my understanding, it was a 2x4 16-foot east side contract, not a composite contract, which changes the game quite a bit.
Well,
Ash, you and I went through a couple different exercises because we got to figure out what tally are we substantiating that composite price to.
And here's the thing, like you said, is like I find that you're pretty highly intelligent trading futures and doing stuff in EFP and everything. Think about how little some people know about that Southern Yellow Pine contract that talk about it, right? So it's a random contract, and you said that east side mills and 4-inch are mainly 8 to 16, not 18 and 20 mils, right? So
correct. A majority of them are. There's some mills that'll pull long length, but yes.
So everybody needs to find out the details of what that Random Lengths is looking at for two reasons. A lot of people, I was on that Southern Yellow Pine contract call a month ago or something, and when you go to these shows, everybody complains like, "Oh, this isn't following the price." Well, I don't think most people know what the price is that it's following, right? And you could have two different publications out there looking at two different type of tallies or whatever. Everybody needs to figure out what the tally is they're looking at, right? Because like you said, we loaded 5 different trucks. And
the spread was $10 to $15 different if you manipulated 2 or 3 units one way or the other.
So if I'm a reporting mill, right, I can tell somebody I sold a random tally, but it had 6 16s on it, right? Or
2 10s and a 12.
It's a much different price if you had 5 8s and in something else. It's still technically a random tally, right? Anyway, that was
a question.
So this is a great opportunity, Ash. I just want to confirm this. Like, are we broadcasting live today for our viewers?
We are.
Okay, great. So this brings up a great point about educational is we got an opportunity. The futures market expires tomorrow, and the market accepts spruce hem fir, Doug fir, and I understand there's going to be a substantial amount of hem fir delivered into that contract. I see that the spread continues to widen between, Matt, maybe you and I talked about this. So, hem fir delivered Chicago. I mean, it looks like spruce delivered Chicago's 548, 550-ish based, which is right on where Jan futures are. And the hemp fir market is about the same price. Is that correct?
Yeah. Right. And it's really just tied to lack of availability of 2x4 right now in the West. So, I'm speaking like Oregon, Washington, Idaho. There's just not much around. And so what you can find is like a truck of 20s or a truck of 18s or a truck of 8s. You're not finding any random car loadings, and there's no volume at all. Really, it goes back to what I said last week. There's just a lot more Doug fir being produced at the moment. And the rally is accepting that too, right? So the Doug fir price has been sneaky good here the last couple of weeks. And that gives mills options. They don't have to just pump out a bunch of cheap 2x4 hem fir at, 500, 515 Chicago type levels. So that ship sailed, it's gone, probably won't come back for a while. And, really most of the last several years, hem fir and spruce 2x4 is traded about equal, really. So this was kind of a weird situation the last 3-4 months where hem fir was substantially cheaper. There was just a lot more of it around. And now we're going back to more of a traditional mix where you're heavier Doug fir in the West, lighter hem fir, and then the hem fir and spruce prices just sort of trade equal to each other. Hey, what do we got here?
So just like, for our viewers, anyone out there, the hem fir, the contract, the futures contract delivers to Chicago. There's probably some markets that would be better served receiving hem fir. And if there's any listeners that would like to EFP for those markets, please reach out to us offline. Let us know.
Hey, why don't you and Ash talk about what's happening in Eastern spruce and Euro? I'm kind of curious. That's your forte.
Yeah, that's a good.
I mean, Eastern spruce market. Continues to. I guess I just say it continues to grind higher. The shipping availability doesn't seem to be as tight as it was in the West. We're still able to buy most items, for 2 week or sooner, car or truck shipment. And so, Matt, you and I had a conversation and up, it's back to that. What we've been doing is we've been basically replacement buying as we sell. We've been backfilling that, saying, hey, it's only the second week in January. We need to have inventory, inventory we buy today, carload shipping, the week of the 26th. That's basically what we're going to be selling in March probably. And, we're going to stick with the seasonal and say, hey, the market's going to peak somewhere between the middle of January and the 1st of April. Mid-January mid-February and 1st of April, mid-February market peak probably is in the $20 to $40, $50, depending on the item from here. And, if we're able to run all the way till April, then we're probably in that 100, 150. And, we get close to 700 Chicago. I don't know about 800. That was an aggressive call on your part, Matt. And you know what? I hope you're right. Cause that would be, that'd be like COVID kind of times, huh?
Do we think buyers are, well, so hey, hold on a second, Matt. We're noticing in the East, things that made the big moves had a lot of the high volatility. 2x4, 104 and 5 ace from bottom to top. How much are 104 and 5 ace up from a month ago to where they're trading at now, Greg?
They moved first and they're probably up, I don't know, $60 to $70 a thousand.
From the low trade price, not print price.
Low trade.
Yeah.
I look at the whole, I look at market, whether it's 8s, 9s, 10s, things are up pretty much anywhere from $50 to $80 a thousand from low trade. That was like early to mid-December when mills were clearing the decks. 2x4 16s that were trading in the low trade in the 540, 550 delivered Great Lakes area. Now you're 620 to 640, right?
Yeah, I mean, 2x4 116s are still strong. 2x6 104 and 5/8 got going. The laggard, Matt, is like 2x6 92 and 5/8 stud grade. That's still cheap. Euro spruce, I think you always said 2x4 and 2x6 16s are really liquid right now. It's hard to find any Euro 2x4 16s. I saw some lists with guys at $700 and some at $650, but it's lightly offered. 2x6 16s, low trade on the dock, 620 Cape. Oh, I just bought there. Maybe that's why I'm saying that. But already selling above there. Less Euro coming over, more people looking for premium type of products.
You think that they might change their strategy going into the second quarter, though, if they see these prices? Let's say we go up another 50 from here, okay? Just academic review. Now you're talking low 700s for 2x4 16s and high 600s for 2x6 16s. If we're up 50, right?
Yeah.
Then does that invite a lot more importing in your mind?
If we're the cheapest alternative to all the other countries around, yeah.
One thing I noticed.
I think the substantive increase is probably more. You need like the market to be plus 700. You got to remember there's 10% tariff in that, so a number where I might have said last year it was 650. Now it's in the mid 700s.
Yeah.
But the lag on that is that's if we got there in the next over the next 30 to 60 days, that would be lumber shipping there April, May, arriving June.
Okay.
Right?
Well, here's my theory on all this is if you look at what the mills in the Western spruce and hem fir sphere have been pumping out for the last several months on 2x4, they got away from heavy 16s and started pumping out a bunch of 18s and 20s because the value was there. And so if you remember when Canfor sent out their EFP list a couple weeks ago, they had a whole bunch of 18s and 20s on it. They still do, but they've also offered some heavier 16 tallies on some premium stuff that they have. But really, they had a lot of 18s and 20s, and so did Fraser, which is that's really not typical for them to have a lot of 18s and 20s. So I think the mills in the West kind of went that direction, trying to capture value smartly. But now that 16s are so frothy again, I think you'll start seeing them cut back a bunch of this 18 and 20 foot production back to 16s and trying to capture that value over the next 90 days. And so the tricky part here is going to be, when do you stop buying and investing in 2x4 and 2x6 16s? Because there's going to be an inflection point where there's just way too many of them available, and everybody can own them, whether they're domestic or Euro stock. And I don't want to be holding on to 500 units of them at the top, right? So my thing is I would rather buy like cheap 10s, cheap 12s, cheap 14s. And then if some mills get, burdened with 18s and 20s, yeah, buy those too, but just start to avoid the 16s and start.
Matt, that's a good thought. Wasn't it, I don't know, 3 or 4 years ago where 16s went discount to 14s?
Yeah, and 14s are super cheap right now. I can't give them away, dude. I'm like 140 cheaper on 14s than I am on 16s on premium spruce.
Yeah.
And nobody cares. All they want is 16s right now. And it just baffles my mind.
If you look, we for the last 6 months, we've been, looking, if we look at the market dynamics, 16s are 2x4 16s are an overvalued item, where, 8s, 10s, 12s, and 14s are undervalued items.
Well, another thing that happens in the spring, Greg, is you get the home center effect, and all those 8s and 10s get gobbled up going into the home center. programs. And so that really just leaves 12s and 14s as like the really obvious undervalue type things, both in 2x4 and 2x6. Now, right now, 2x6 12s are really good. So there's no undervalue there. They might even be overvalued. But I mean, 2x6 8s and 10s would be something that if a guy can buy relatively inexpensive at the moment, might want to put those into a warehouse for 2 or 3 months and see what happens. It's just time of year more than anything. You got to know we're in the treater season. They like the short lumber, and we're getting into the retail season too, and they like the short lumber also. So that short lumber, whether it's studs or number 2 or premium, it's all going to kind of tighten up here over the next 4 months. And there's some more opportunity there. Don't think that studs are just because they're up 60 or 70, just going to stop all of a sudden. I'm not sure that they will.
Yeah, no, it's a question with that. I don't believe that buyers out there, we can say of trust facilities, retail, whatever you want to say, multifamily, I don't think everybody's covered for the first quarter yet. And I can tell that by the requests we're getting for quick shipment. I don't know if there's 50% more to cover. I don't know what the percentage is, but what if everybody had to step in the next week and cover all their first quarter needs and start dipping their toes into Q2? Or am I wrong? Are we already covered on Q1?
Well, I mean, I'd say I've seen a steady flow of coverage of jobs starting, like over the holidays and like late December. There was like, the quote unquote, the February start stuff, these last week or two, and there's stuff it's April start. They've been covering that in the cash, right? Because we continue to carry $50 to $80 premium on the forward price, so that makes sense, right? So the multifamily job. I mean, I guess I'll come back. I want to come back a little bit. We've talked a lot about supply. Is talk about the demand side. We talked about this coming into 2025. Everybody was very optimistic. Demand, blah blah blah. We're up to October housing starts. The government is playing catch up. I figure we'll probably get November and December, maybe by St. Patty's Day or Memorial Day. But I mean, I estimate starts for 2025 are going to be flattish to down, a marginal amount. Again, then the wild card ends up being is like what happens if demand actually is better? We talked last week about the things that the government could do to improve housing demand, and the president has come out with a couple of teases on that. I believe he must have listened to the pod last week, because right after we said that they should buy down mortgages to reduce that price, he said we're going to buy $200 billion worth of Fannie and Freddie bonds and drive that rate down, and now the 30-year sub 6%. You get that rate down to the low 5s, and that's gonna release some pent up demand. We also talked about the fact that there's somewhere between $100 and $150 billion worth of tax refunds that are going to be flowing into people's bank accounts here as during this tax filing season, and there's another $150 billion in lower withholdings because of one big beautiful bill change in the tax law. So that's a positive for the income side, and you've got the positive on the demand side. I mean, what would the market be if demand ended up being up 5% or more in 2026 from 2025?
It would probably meet or exceed what Matt's expectations were of the high of the year. Based on if that happened, it would happen at the same point where mills are still in the process of going off or taking production off the market, not ramping production up, right? Like any bump in demand is going to come at a time while your production is dropping. I think, Charles, is that the same in the South or not? Or can the South come up with production pretty quickly?
I mean, I think it's probably the process is very similar. I don't know if the timelines are exactly identical, but I'd probably say within 20%. Yeah.
Yeah, no, that all makes sense. And Greg, I liked everything that they did last week. My thing is, this is just I still think the median price home has to drop like $100,000 in an actual freaking price in order to make it affordable for kids. Oh, guess what? Nobody wants lower prices on houses. They only want the part of the process that works. They want people to borrow for longer. Like affordability to me is they need to have a lower input, a lower cost getting in than just some kind of fancy
part of the problem there, Ash, is as I've counseled my children now that they're young adults is, look, you don't need to stay in Oregon. This is like one of the top 8 most expensive places to live in America. You can go to Indiana, you can go to Ohio, you can go to Texas, you can go to Idaho, New Mexico, Arizona. There's a lot of other places where people can move to and have cheaper cost of living right off the bat, Yeah. So, part of the problem is that you might have to be more mobile in your ideas about your future if you're young. But I want to switch gears real quick, and I had a thought while you guys were talking about what would happen if the Supreme Court rules against Trump's tariffs. And the basic argument I heard on the way into work this morning on the news is that it's not legal for him to just slap a worldwide 10% tariff on everybody. He's got to go country to country, reason for reason. It's got to be pinpoint accurate. He can't just blanket tariff the whole world 10%. Well, if that gets removed, now all of a sudden the Canadian producers won't be paying the 10% that they're paying right now on top of the 35% that is the ADD CVD. What happens now? Now we get some bad news, a little cold water. Maybe that kind of chops the rally out, takes the knees out from underneath it for a little bit. We get a little sell off. We get some guys panicking. You know what I would do if that happened? I would be buying like crazy, because I fully believe that this market has real teeth to it, and it's going to be more than 2 weeks of like upward conditions. I've already got people that are missed on this, and they're saying things like, this is a real good tell. It's like playing poker, and like you're trying to see if anyone's bluffing. When they start talking about, oh yeah, there's going to be a lull in February, I'll just wait for that. And they might as well just tell you they missed it, because they did.
Yeah. This is like the John Candy and Stripes poker game.
Oh yeah.
I think I'm before my time. I might have to watch the clip on that one, Ash.
I'm a betting man.
The other thing is the other thing is you've got a big segment of the marketplace that I don't want to say it is. They've changed their buying pattern. They're not like the independent lumber dealer that would load up and buy 90, 120 days worth of inventory when they thought the price was right. They buy every single day, every single week based on their takeaway. And they keep their inventory days in that window that is relatively tight. It's a 30 to 45 day window. And part of what you get is when the market moves up like this, the field sells based on average cost. They don't sell based on replacement cost. Ashley and I talked yesterday we were talking about something, and I said, hey, you know what? We just have to sell based on our replacement cost every day. And I mean, yeah, that hurts when the market's down, right? Because we're taking humongous losses in the, on stuff. But, now we get that payback. What happens at the yard level is they sell that cheap lumber, and then it gives the appearance that demand is better because their customers are smart, and then they need the replacement buy. And at the top of the market, they have too much inventory, right? Because their sales slow because now they're on the market.
I think it has a lot to do with capital allocation and return on investment.
Yeah.
I mean, mostly a lot of these companies, we're not immune from this, and neither are you, Greg or Ashley and myself and Charles, we have to look at how's our money being allocated and what kind of return do we get on if we put $1 million worth of inventory somewhere. Did it make 5% or did it lose 5%? And so what's happening here at the beginning of the year is all the bad ideas and bad return on investments and misuse of capital is being eliminated or has already been eliminated for 2026. And so that we start the year off with a lot tighter supply base. The fly-by-night wholesalers that put some wood on the ground, even the distributors that do it all the time, they've tightened up their SKUs. You know, everybody's kind of running a tighter ship here at the beginning of the year, and I think it'll remain that way. And so you've got a different kind of marketplace that we're in right now compared to 3 months ago. You know, we were swimming in lumber 3 months ago, and guys had, myself included, beaks and feathers all over the place. We joked about it on the podcast. You know how many beaks and feathers I have left? Hardly any. You know, I've blown them all out. I just took the losses and got rid of them. And you think I'm going to go put more of that back into my inventory in 20? No. So there's going to be some fiscal discipline. That's what Greg's talking about from these big companies that don't want all their money tied up in inventory. They got to keep the short leash. And I think that kind of market, that tension, it allows for longer rallies. It allows for mills to actually have a chance to make some money again, right?
Yeah.
We got a long ways to go, though, for the Canadians to make money with that 35% deal that's going on right now. If we were down at 10% or 15%, they'd have a shot. And I don't know the economics of Southern Yellow Pine. I can only guess that they're starting to reach sort of break-even levels again. You know, I mean, if we're up $70 or $80, is that about right, Charles? Are they making money now?
I mean, they should be making money now.
Okay, good.
At these levels.
So you have like,
and Matt, let's not forget that what we've been talking about going into 2026. I think there's a lot more price discovery on lumber out there because there's less contracts this year.
That's another thing that's driving the cash, right? Like people thought, oh, it'll be easy to buy lumber all year long. I'm going to cancel my contracts. Well, we'll see how that strategy works.
Which traders like us love it when there's less contracts out there. That's that's just better for the market. There's real price discovery, right?
Yeah, for sure.
Yep.
Yeah. Well, cool. Anything anybody's buying and selling that they like and don't like, kind of like the Merry Date dump, except I know I'm buying 2x6 16s. I think, and Greg, I'm going to make this our idea. We still think 2x6 16s, especially the premium stuff, is going to go a premium to 2x4 16s. It's close right now.
Yeah, they're almost the same price right now, and we're expecting the 2x6 16s to trade premium to 2x4s over the next 30 to 45 days. Yes,
I wanna buy some 2x6 14s, but I just can't do it. I mean, there's some stuff sitting on the docks down there at like 445, 450, which is cheaper pencil trim than 12s. But I mean, there's some values that what are we getting rid of? Like said, anything that we've got that's older or whatever, but like we kind of got the inventory right size. There's nothing to get rid of. We have holes and stuff we're looking to fill right now.
Yeah.
2x4 16s. We're not afraid to spin those quickly. I put it that way. That's one thing we're not ashamed to get rid of if we're getting our number for it, because at some point when the musical chairs are done, like you said, Matt, the good point you brought up, those things could be, traded at the same price as random, right?
I mean, they could suck out $100 in 30 days.
Yeah.
Just on oversupply. I'm not sure it'll happen, but I've seen it happen. I would say again, I'm just going to repeat what I said last week. I think people should be paying close attention to 2x8, 2x10, and 2x12, all grades, all species. I just think that the log size is an issue, and that's going to limit your options as a buyer, period, in all regions. And then, like I said, I think just short lumber and undervalued lumber, whether it's 2x4 and 2x6, guys should really take some risk. Go for it. Just be naked long. Don't worry about hedging it. Yeah, just buy it, stack it, sit on it.
Just put it on the table, right, Matt?
But if you want to just, you know, make a great return, you've got a good option right here. I mean, if you buy undervalued items and sell March futures at 605, that's a 50. Like we rolled from Jan to March today at $55.
Yeah, I'm starting to look at March.
Like that's I mean, hey, I hope that we lose a lot of money. I know I'll be getting calls from Montreal saying, "Hey, why are you losing all this money?" And I'm going, "Hey, this is good. This is good.
Yeah.
We want to lose on our March shorts."
And I've heard that conversation before. Yeah. It makes sense.
If we lose $100 on March shorts, Q1 is going to be a big quarter, right?
Yeah.
So, and I just like, you know, Matt, I understand what you're saying is, you know, there's a time to, you know, to bull up. And, you know, I've been accused of always being bulled up. But Charles is going to get bulled up this afternoon when he gets out with his doggies
and sells his cows.
Loading up the cows this afternoon, Charles.
Final thing.
No, we got to load 2 trucks tomorrow morning. We got to catch them.
How many head do you have?
In South Carolina, 240, and then in Iowa, we got another 200.
Damn, man, you're a player.
No.
So
no, we are not. We are not, my friend.
I do have one thing I want to say real quick. This whitewood 2x4 and 2x6 stuff that I handle, you know, about once every 3 months. I have a bunch of 2x4 right now. So if anybody's listening to the podcast, they want to talk to me about rail cars or whitewood, give us a ring. And
what's that market price delivered Chicago today on like randoms or straight 16s?
You know, we're trying to get basically
the pod?
No, I mean, we're basically just trying to get similar to Hemfer and spruce prices. That's how it trades. And so, if we can get close, we do it. And it goes to 95% of it goes to Western markets that buy Hemfer and spruce on purpose. So
can you treat that?
But
Matt?
yeah.
Matt, can you treat that product? Can you treat that product?
Yeah, some of it goes to treaters. Most of it goes to end user retailer guys.
Okay, perfect,
guys. So they use that for plate.
Yeah. So like if you look in the Western Wood Products Association grade rule book, there's a species called Western Woods, and there's another one called Whitewoods. I think this one is the Whitewoods. It just allows you to put like species like alpine fir and Sitka spruce and ponderosa pine and lodgepole pine into a kind of a catch-all species thing for mills. If they get into a big Doug fir log cut and, you know, there's a little bit of other species of trees in there that don't fit into Doug fir or hem fir, they can just run it as SPF South or ESLP or whitewood. And the strength values aren't quite the same. They're a little lower. But for years, I mean, I've been trading ponderosa pine / whitewood, and there's still mills that make it on purpose, mostly in California. There's a few in Oregon, Washington. There's also a few in Idaho and Montana that still make it on purpose. And it just sells to people that are familiar with that species or people that are willing to switch and maybe save a little bit of money.
Guys in the field must love it because it's so like nice and light and easy to work with.
It's beautiful lumber, honestly. I mean, it's really nice. It's just not quite as strong as Hemfer or spruce. That's the only limitation.
Gotcha.
Charles, you got anything that you like to buy or sell?
Not really. I mean, I'm not married to anything. I think being pretty open to opportunity is the best way to play the next 60 days. And having the ability to execute.
Yeah.
And selling at replacement costs. If you can't sell at replacement costs, don't buy it.
Above replacement cost. That's the goal.
Above, well, I mean, at or above.
Yeah. Yeah.
Yeah. But no,
I mean, I always find one of the hardest things is when the market's like this is, you know, staying up on where replacement cost really is, right? I mean,
it's hard to track right now. I mean, it really is.
You know, and we got, we've got these price lists that we work off of, and trying to keep them up to date based on like where where you can rebuy is definitely a challenge. But we might take a few orders too cheap here and there. I mean,
everybody does it. You got to keep it moving, Greg. You got to keep it moving.
My people know that my nickname is BCBB. Be cheap, be busy. Guys, great to be with you this week. Look forward to next week.
Bye, boys.
Y'all be good.